All right, everybody. So I want to give you your November market update. My name is Justin Udy with Justin Udy and Team Real Estate, and November has been a really amazing month. So a couple quick statistics you need to know about the Salt Lake County market and what is happening. So really quick, active listings are up around a little over 8%, and what we're seeing is sold listings are down a little below, right around that 6% range. What's really interesting is that we're seeing on price per square foot, the price point really hasn't changed. What we've seen is we've seen a fluctuation in the market where we are seeing more homes that have essentially come off, but it isn't so much that we're not seeing activity in the market. We are seeing activity, but it is changing. So let me tell you what the big difference is that is occurring right now. So a lot of people you've seen maybe seen their homes sitting on the market, or they haven't been getting the activity. So you're thinking, oh my heavens, those homes aren't selling. What you're finding is people are doing a couple other items. So obviously homes are doing normal sales, but they're also doing a couple other creative financing deals that is essentially helping the market right now. Really quick, this is what we are seeing. Whereas before in the previous market, or even a year ago, we would see prices where a price would go on the market, a property, people would make an offer, and sometimes they get beat out, and so the price went higher. The concessions or closing costs were not even existent, and that any repairs that were going to be done would not be done. Whereas now, where you have an inventory in the market, you are seeing people making offers where the price is not getting exactly the full list price. There are concessions being made, and people are more motivated, or they're actually more flexible to make actually some sort of repairs on the property. But the way that they're making this work, and this is something that is really interesting in today's market that we're seeing is they're doing something called a 3-2-1 buy down or a 2-1 buy down. All this is, folks, is essentially, imagine that you have a $500,000 home. Somebody says to you, I want to give you $500,000, but I need you to pay $20,000 commission for a 3-2-1 buy down, okay? All that is this. Average interest rates, by the way, had gone up in the month of October as high as 8%, and they did stabilize. So let's just use a rate of around 7.5%. So somebody says, I need you to pay $20,000 towards my closing costs or my rate buy down. So for that first year, 5.5%. The second year, 6.5%, and then that last year, that's 7.5%. So just know that rate is essentially bought down for a short term, or they're doing something referred to as a permanent buy down. And the permanent buy down is that. Let's pretend that the average interest rate is 7.5%. They ask for a certain price point and they buy down that rate, let's call it 6.75, 6.5, 6.25. The more you pay it down, the higher the cost. And then we have seen a large influx of where we've personally been doing lease options to own, contracts for deed, and seller financing on properties. And with those, again, there is just different terms where people are being a little bit more creative in trying to put together what this interest rate challenge, because the terms interest rate are just as valuable as the price. And when things start becoming a little bit unaffordable for folks, that's when you start seeing changes in the market. Another quick note, just so you know, that grants are still available. We have a number of grants that are still available for the new construction program. If you have any questions, please reach out to us. And they're coming out with a brand new one where with 5% down, you can purchase a multifamily. And so that is for owner occupied, just so you know. And so again, when you start seeing these changes in the market or adjustments, you start seeing these creativity, whether from banks, buyers, and different folks. So are we seeing activity in the market? Absolutely. Are we seeing a change? Absolutely. But I will tell you, I think we're seeing if things are done correctly, if they're marketed right, if they're showcased, priced accordingly, and they're really making sure that they're white glove clean and the work has been done, we're seeing those listings sell because they're showcasing, look amazing. The folks that are just overpriced, not taking care of them, they're really starting to go by the wayside where they get lost with all of the other numbers of listings that are out there in the market. The last thing that I just wanted to mention to you, we are seeing some loan assumptions, not as much, but it's just because the price point of let's call an average home of $500,000 on a house, the loan assumption, let's say it's $300,000, bridging the gap between what that loan is, and that ends up being a challenge. And so oftentimes what we're seeing is not as many loan assumptions, but we are seeing them occur. If you have more questions about our market or the value of your home, obviously we are here to assist you. Please let us know if you have any questions. Again, it's Justin Udy, and looking forward to talking to you soon. Thanks.